right, we're back. Look what's happening. Today is May 4th, Saturday, May 4th, 2024. And I just popped on Market Watch to see what was going on, what was the latest news that we had here in the market. All right, so it looks like they have a big, I found something I thought was really interesting because there's a lot of people, whether they know it or not, they are invested in Apple. Okay, whether they're buying Apple products or they're invested in Apple in their private brokerage account, or they're invested in Apple through their 401k or their IRAs. Okay, so um, the headline reads, "Here's what is so amazing about Apple's stock buybacks." So, for those that didn't know, Apple just gave their quarterly earnings a day or two ago, and one the biggest piece of news was that they announced buybacks for shares. So for those that don't know or that may be new to investing, when a company starts to buy back their own shares, they feel like, or they're sending a message to the market that they feel like their shares are undervalued and are on discount and will soon go up. So they're saying, hey, we believe in what we have coming around the corner and what we're gonna do over the near future, and we believe that now is a time to buy because the price of our stock is gonna go up after we release our new initiatives. That's the first. Um, that's the first good thing about, or the first thing to know about, buybacks. Second thing, um, this company is telling you, hey, we're gonna take shares out of the field, take shares off of the open market to make the shares that you already own more scarce. And if they're more scarce, then they're going to be more valuable, presumably, as long as the company is valuable. And if they're more valuable, the price for each share is going to go up because there aren't enough to go around. So people are going to have to pay more to get one. So buybacks are huge for a company. But a lot of times, buybacks come when the company doesn't have a better way to use that same money. In other words, instead of using that money on creating a new product that is going to sell a lot of units, they're like, oh, well, we can't think of anything else to do with this money. We can't think of any way to, um, you know, any research and development ideas. We can't think of a new, the next major product that's going to take our company to the next level. We can't think of anything. We just got rid of our car building unit. We got rid of our TV building unit. So we're not going to build TVs. We're not going to build cars. So you know what? We're just going to buy back stocks. Like that's how we're going to give you back value and thank you for holding our shares, all of you Apple shareholders. Let's get into it. All right, late Thursday, Apple, which is up 5.98%, announced its quarterly results, which included a 4% decline in sales. Ooh, that's bad. From the year earlier quarter to $90.75 billion. That's crazy. And a 2% decline in net income to $23.64 billion. The company also reported a 10% decline in iPhone sales, down to $46 billion. So, if you are aware of Apple, you know that the iPhone is their number one product, and it's their largest single selling item. I think 40 to 50% of all of their sales all year, all the money that they bring in, comes from the iPhone. So that's huge that they're down 10%. It's not a good thing. So why were Apple shares up 7% in midday trading on Friday? There's a Paletti pointed to, I mean, Therese Paletti pointed to a restoration of confidence for investors. A lot of this stuff is mental, you know. It's mental, it's emotional. It's not just about numbers. Um, because the company's board had authorized an additional $110 billion stock buybacks. All right. So it turns out that Apple's buybacks have had quite a positive effect on its earnings per share. When a company repurchases stock, the share count is lowered, which boosts the earnings per share ratio automatically. That's important to know. So you can't just go off of earnings per share, because if there's less shares out there, it's going to make it seem like the earnings per share went up when the earnings per share did not go up, because of the company increasing their sales or their earnings. It went up because the shares went down. Hey, that's some engineering for you. But if the company has been shoveling new shares to its executives at the same time, the buybacks might only serve to mitigate the dilution to non executive investors. Mm. I wonder, are they accusing Apple of handing out shares left and right to their executives in terms in like as another form of pay? Like, instead of giving you a $5,000 raise or $5 million raise or a $10,000 bonus at the end of the year, I'll just give you more shares. Here's 100,000 shares, which would lower the value of each share if they're just throwing shares around left and right. Okay, the buybacks might only serve to mitigate the dilution to non-executives. Okay, yeah. And in the case of Apple, the net share count keeps going down. So that's a good thing. Even though the company's net income was down 2% from a year earlier for the most recent quarter, earnings per share actually increased a penny to $1.53 per share, because the average share count used to calculate used to calculate earnings per share had declined by 2%. So the share count declined by 2%, therefore the earnings per share went up by a penny. Okay, those may not seem to be astounding figures, but consider this. Over the past 10 years, Apple's share count has declined by 37%, according to FactSet. And over the past 10 years, Apple has also done um, two share splits, if I'm not mistaken. So that's a good thing. Either way, tune in. If you guys should read this article if you really want to know what's going on. I just want to tease it and let you know that the buybacks are huge and they were announced. If you're a shareholder, each of your shares of Apple will soon be worth more money. Yeah, that's it for today. It's your boy Kezio, trying to grow this wealth together. Let's do it. I'm out.